China has seen one of the greatest rises in human history, from poverty to relative prosperity. And in today's video, we're going to take a look at the Chinese economy to see if it's investable, or is it a house of cards about to come crashing down? If you are new, welcome to my channel, and my videos are about investments that anyone in the world can make, not just Americans. Today I'm going to give you some good points, some bad points, and then my strategy for investing in China. Literally all over the internet, there are strong opinions on both sides of this argument. So sit back and just try to understand both sides of the story here and then make your own decision. From a country in deep poverty to the industrial powerhouse that it is today, in just 40 years, China has exploded onto the scene. The rise of China has just been unbelievable, so let's work out the best way to approach China as an investment. The first thing we have to do is we have to understand what we're getting ourselves into. In the 1970s, China was a mostly agricultural country with 80% of its population living in absolute poverty. And at this time, the country went through what was called a cultural revolution. This essentially was when anyone who was wealthy or intellectual, well, they had everything taken from them and sometimes even killed. The idea was that all Chinese people are created equal and should be equal. So for all the people that had things or were smarter than other people, well, that was considered bad. Crazy, right? The country didn't grow for 10 years and the mistakes of the regime were starting to show. Then in 1976, the next leader came into power, Deng Xiaoping. Sorry for the pronunciation, I don't know Chinese. Now, he was still part of the Communist Party, but he saw the mistakes of the predecessors and he went about trying to fix this problem by making China the factory of the world. He opened the country up to foreign investment with the promise of cheap labor. And this is when China really started to take off. And this rapid change has brought the majority of people from China into the middle class, with disposable income and a dream to make their lives better and better. Okay, now we all know about the growth of China, but let me explain one common misconception. One of the biggest misconceptions is that China is fully communist. Okay, so the political party is still called the Communist Party, but they're far more of a mixed economy. See, 20 years ago, maybe people were getting rich because they're well connected, but now people are getting rich because they're creating value. Look, state-owned enterprises still exist, but the growth of the country is coming from startups and innovation. So it's definitely a hybrid system, not full-on communism. And in 50 years' time, we'll be able to look back and see whether China was doing a great thing or maybe it was a mistake. But something has to be said about how they can get things done if they really want to. A speaker at a conference I went to in Guangzhou told us to look out the window. It was night and we could see all the lights and skyscrapers. He then said, "Do you know what that is?" He said, "That's the result of democracy not getting in the way of progress." So maybe they have got something right. Only time will tell. For the last 30 years, local governments have been very supportive of businesses in their region, and they're trying to do everything that they can to support that business to grow and help the region grow as well. Local governments know that the more profit that these businesses make, the better the region's going to be. It's not very communisty, is it? And China got really good at manufacturing. They got so good that they could put apartment blocks up really fast. And this led to what I think is the first big issue in China, and that is the ghost cities. A ghost city is an area of empty high-rise apartment complexes that were built for future demand. This doesn't make much sense, does it? And apparently there are 50 ghost cities throughout China with the capacity to house more than 65 million people. But hardly anyone lives there. It's the complete opposite of what we're used to. Normally a city grows and builds more houses when there's more demand for houses. But in China, they have built first and then they're just waiting for the people to arrive. So the government is hanging on to this massive amount of debt because they're the ones who commissioned these new cities. And this leads me to my second big issue in China. That is, who is responsible for all of this debt? Well, that would be the Chinese banks. Now, these aren't your typical banks. See, they're actually owned by the Chinese government and fund government projects. These are the four largest banks, not only in China, but in the entire world. And it's hard to even understand the size of these banks. They're bigger than a lot of countries. So there is clearly a real estate bubble developing in the country and it could burst at any moment. The problem will be, because the governments are in control of the banks, will we actually ever know? Will the bad debts just be paid off by taxpayers' money and life will just go on as normal? This brings me to my third big issue with China, and that is the culture of saving face. Look, I don't want to stereotype, but I think it's okay to talk about the general culture of a society. The feelings of shame and embarrassment are really strong drivers in the Chinese culture. And I have seen this firsthand when I went to Shenzhen to visit my manufacturers. For the boss of the factory, it was very important for him to show me his nice offices, his very expensive alcohol, and all of his other prized possessions. It was very important to him that I thought he was successful and powerful. I really just wanted to talk business with him, but I had to respect his culture and talk about all of his possessions. I went to a handful of factories and it was all just the same charade. So I can imagine the Chinese government will not want to be embarrassed by their real estate bust when the time comes, so they'll probably just push aside the bad debts. So the problem is, well, it's just not very transparent, is it? Okay, now I want to talk about some of the reasons why I'm thinking of jumping on the China train. See, I think that the Chinese government are really good long-term thinkers. They have been funding the largest infrastructure project the world has ever seen, called the Belt Road Initiative. This is an ambitious project to connect China to more than 60% of the world's population. They are setting themselves up to be the center of the world, and they have been very strategic about this plan. For example, they go to a poor country like Kenya and sell them on the idea that China are going to build a new shipping terminal. The shipping terminal is also going to be built by Chinese manufacturers, so the money also goes back to China, and Kenya will make the repayments over the next decade or so. This seems great for Kenya because they'll be able to trade a lot more easier with lots more countries. But in 2019, Kenya couldn't afford to make the repayments on their loan to China. So instead of China just claiming it as another bad debt on their books, they actually just took control of the port. This might have cost billions of dollars, but the strategic location of having the busiest port in Africa is now fully Chinese owned. So in the future, Africa's biggest port will be doing most of its trade with China, not America. And this isn't happening just in Kenya. China are working on Pakistan, Djibouti, Sri Lanka, and other poor countries. It's a very strategic play by China, and they're setting themselves up for the long term. Morally, taking advantage of these poorer countries does seem a little bit unfair, but the countries are also going to see increased activity in their countries, so it will be a win for them, but it's going to be a far bigger win for China. Another area of the Chinese economy that I think is a slight misconception is the level of corruption. See, a lot of people don't invest in China because of the widespread reports of corruption. Now, I can't say that corruption doesn't exist in China. It obviously does, but I don't think it is to the level and detriment that we think. Day-to-day Chinese people don't have to pay bribes to the police or bribes to get food or anything like that anymore. And if you have an idea, you can start a business freely without the fear of getting shut down. And I know the legal system has a long way to go, but China is not the same place as it was 30 years ago. We only see the China that the news and the media want to portray. A rising economy that in some ways is better than America is not what the Americans want to hear. So I think China is just not what most people think it actually is. And I think this presents ourselves with an opportunity to learn how to invest in a place where a lot of people are not looking. Okay, so there are definitely risks with China, and I acknowledge that. And if we could 100% trust the financial reports, then that would make things so much easier. So let's now look at the Chinese stock market as an opportunity to invest. From a stock market perspective, there are some serious short-term issues in China. The US-China trade crisis that has been hurting the Chinese economy for quite some time now, well, this was happening before the current lockdown. And these two things together will undoubtedly send China into a recession. But the whole world is in a recession anyway. So I see the next 2 years in China unfolding as a bit of a stress test for the Chinese economy. The economic issues of the country will be far more obvious to see in a recession, and I hope this leads to some sort of reform, and especially in the banking sector. Look, I don't want to sound evil, but a Chinese GFC might actually be a good thing to shake out some of those bad attributes in the economy. When the GFC hit the USA, well, the banks had to get a lot leaner and a lot better, so now they're in a far better position to handle the recession. And I kind of want something similar to happen to China. China is already the second biggest economy in the world, and I really like their ambitious plans to be the center of world trade. But my level for trust is not so strong as compared to other investable places, so I don't want to be too heavily weighted into China. But a few percent of my portfolio I think is a wise move because of the tremendous upside potential. Before I give you my opinion on China, I thought I would share with you two completely different opinions from two very well-known investors, so you can see how difficult it actually is to identify whether this is an opportunity or not. This first opinion is from Phil Town, who you might have watched his videos on YouTube before. He has a big presence in the online investing space, and I thought his opinion was the best anti-China opinion I could find. He said, "I see Chinese companies every day that appear to have wonderful meaning, moat, and management numbers, and are massively on sale. The problem is the management might be liars. And from that, the problem is the margin of safety is an illusion." I totally agree with his point here, and I think that investing in China is definitely a higher risk game. Now, this next opinion is from Charlie Munger, who is the vice president of Berkshire Hathaway, which is the most successful investment company of all time. Charlie said, "American investors are missing out on China. It looks too hard, sitting in Omaha, but it is where they should be looking. China is a big market, and we love big markets." He also said that in China, they love to gamble in stocks. This is really stupid. It's hard to imagine anything dumber than the way the Chinese hold stocks. So what Charlie is referring to is that the Chinese individual investors are gamblers and speculators. And this is why I think it's just such an amazing opportunity. See, we can apply our value investing techniques and hold for the long term. because the stock market in China is even more inefficient than the stock markets in the USA. Okay, so now let's do my opinion. And honestly, at first, I thought the Chinese banks were going to be probably the best place to do an investment in China, mostly because they're run by the government. So that means that taxpayers just won't ever let them fail. But then I changed my mind. Now, as investments go, I think avoiding the state-owned companies is not a bad idea, as I find it really hard to trust what exactly is going on in these businesses. Yeah, sure, they're probably not going to ever fail, but I also will have no idea if they're growing. And I shouldn't invest in something that I don't completely understand. And I think it's going to be impossible to completely understand what's actually happening inside these Chinese banks until they're 100% privatized. So I think the better opportunity is in the 100% privately owned company space. So I'm going to be looking for companies that have been around for at least 10 years, they're 100% privately owned, and they need to far exceed my evaluating criteria. I also want a far bigger margin of safety because there's always that potential that the companies are lying on their financial reports. So it definitely isn't uninvestable, but I do think investing in Chinese companies does come with more risk. And therefore, I would only want a very small part of my portfolio exposed to China. The good thing is most of the investing world sees the same risks as that I'm seeing in the Chinese economy and with Chinese companies. So this means that a lot of the companies are going to be very undervalued and underrespected. And because the country has been rising at such a rapid speed, well, the good times can't last forever and there's inevitably going to be a crash at some point. So just like it was a really good time to invest during the GFC in 2009, I think prices of good companies are going to be offered to us at great prices. So this will be my exact strategy. I'm going to research into companies that exceed all of my strict criteria, make a list of the companies that I think are good long-term investments. Then I'm going to wait for blood to be on the streets, like a serious China GFC. I will then make sure my companies on my list are going to be okay over the next 20 years, and then I'm going to go shopping. Because my understanding of the Chinese market is that when there's a little bit of a panic, well, it could turn into complete chaos. And the prices that are offered to me are going to be very, very attractive. Okay, so let me just summarize all this up. So China is already the second biggest economy in the world, and I really like their ambitious plans to become the center of the world for trade. Their population is so big, and most of the population now has disposable income for the first time. It's a recipe for a lot more growth. Chinese investors are gamblers in the stock market. Therefore, applying strong value investing principles, the opportunities are going to be bigger. But my level for trust is not as strong as other investable locations, so I don't want to be too heavily weighted into China. But a few percent of my portfolio I think is a wise move as there is tremendous upside potential. I'll wait for blood to be on the streets and then choose the companies that are going to be completely fine through the drama. A big stress test will be good for the long-term prospects of China, even though it will be painful. A bit of tough love will set them up for the next 20 years. So it'll probably be a wild ride, but I think investing into a really good company in China with its massive population and long-term potential will be worth the ride. The due diligence that I do into a company is going to have to be a lot deeper, and I'm never going to invest more than I can afford to lose. Subscribe to my channel if you like my take on investing, and leave a comment with your thoughts about China. It's a very interesting and complicated topic. See you in the next video.